origin of insurance. The earliest form of insurance was the marine insurance policy. The marine insurance policy. They operated through the mechanism of ship owners agreeing that 1. That whenever goods were transported, the owners of goods arriving safely at destination will compensate those whose goods were damaged during the voyage. And this is the conventional principle of insurance, what it is built on. That policyholders of similar policies, insurance company will collect premium from them, which is called common pool, and compensate any member of their pool that suffers a loss from the fund they have paid, or the premium they have put together. That's called a common pool. So this one operates in that way. The merchants that didn't suffer a loss will compensate whoever suffers a loss, or whoever is a member that suffers a loss. They also operate then, the marine insurance operated then as merchant pay a charge that is based on the value of goods when shipped by each merchant. This charge could be seen to be the premium. The premium. They pay a premium or a charge as long as a merchant, you be made to pay a particular fee or a charge as a member of that group. This charge of premium that is paid into a pool is used to fund the financial loss suffered by a member, just as I've just said. That it is from the pool they now compensate whoever suffers a loss. This could be equivalent to mean is a major function of insurance, one of the primary functions of insurance, that is common pool. That's one of the primary functions of insurance, to bring together risk of similar character and collect premium on those risks, and from that premium they now pay whoever suffers a loss. So this is just the way that insurance was practiced then. So in 1601, by 1601, the conventional insurance practice of insurance became so developed in Britain that its parliament had to pass and had to regulate the business. The passing of an act to regulate the business brings about what we call the laws of England, the laws of London. The laws of London. This is a British insurance and reinsurance market. It's not itself an insurance company, but they are just majorly markets for insurance and reinsurance business. It is usually referred to as the world's largest marketplace for insurance. And the motto for it is the Umbrella Fides, which can also be referred to as the principle of utmost good faith. In 1774, the participating members formed the Society of the Lloyds. There are usually two classes of people and firms that is active in the Lloyds. The first are called the names. These are the capital providers of the market, just like shareholders of a company. The second are the agents and brokers. These can also be referred to as the intermediaries. Intermediary and other professionals. Another program will support the members, underwrite the risk, and represent aside customers. They are the intermediary. Let's now discuss the origin of insurance in Nigeria. How insurance came into Nigeria. Before the advent of Western civilization and modern insurance, there have been in existence some form of social insurance in Nigerian society. These social schemes involve through the evolved through the existence of extended family system and social associations such as periodic contribution, just as Ajo, Isusu, Ashishe, and which usually occurs among the young ones in some part of Nigeria, usually the eastern part. The Ajo in the western part. The family members will come together and make a contribution. The old members of the family will be contributing towards a particular purpose. Purpose is that anybody that has anything to do, has any loss, it's from there they will now bring out money to financially compensate that person. So insurance was unknowingly practiced that way before the advent of Western civilization. So this continues in 1891. The first formal presence of an insurance company in Nigeria took place. The modern conventional insurance practice came into Nigeria in 1891. This is when the Royal Exchange Assurance Agency that was established by the African and East Trade Company came in 1891. That was when the formal presence of a conventional insurance practice began in Nigeria. So in 1890, Sam Obolaji Bank Anthony became the first Nigerian to be appointed an agent by the British company, Sam Obolaji Bank Anthony. In 1921, the first insurance company, we've been having agents, the first insurance company to establish a branch office in Nigeria is the Royal Exchange Assurance Company. That was in 1921. That was when a full-blown insurance company establishes their office, not to operate as an agent, but it's a full-blown insurance company here in Nigeria. They are operating from the office in Lagos, the Royal Exchange Assurance Company. In 1950, the first Nigerian insurance company was established by Dr. K.O. Mbadiwe. That was when the first indigenous insurance company was given a license to operate, and this was established by Dr. K.O. Mbadiwe. And the name of the insurance company was the African Insurance Company, AIC. Now let's discuss some major status that affect the price of insurance in Nigeria. That is some major status that influence the operation of insurance practice business in Nigeria. Number one is called the Motor Vehicle Third Party Insurance Act of 1950. This is the first statute affecting insurance practice in Nigeria. The main objective is to compel individuals and corporate bodies to effect any type of motor insurance. As long as you are a vehicle owner, you must have at least a minimum of third-party insurance, motor insurance cover. This is to compensate any victim or any person that suffers a loss or property damage due to the use of a vehicle by a policyholder, the third party, which involves the general public, the passerby, and any other person that are not involved in the insurance contract. The majorly is to assist an individual that is a vehicle owner that to compensate or to help in taking care of their liability that might arise in the course of use of their vehicle. The second one is called the Marine Insurance Act of 1961. This is second legislation affecting price of insurance. This merely incorporates the provision of Marine Insurance Act of 1906 into the Nigerian law. The Marine Insurance Act of 1906 simply says into the Nigerian law. The third one is the Insurance Miscellaneous Provision Act of 1964. The Nigerian Insurance Miscellaneous Provision Act. The main objective of this legislation is to compel insurance companies to invest at least 40% of their net premium into the Nigerian economy. Of their net, that's after tax, it must be invested into the Nigerian economy. This mainly to reduce capital flight. Most of the company then they have some British origin, and they are making their money here. The profit will be sent down to their country, so that's capital flight. But the government now says that there is need for them to invest back into the economy where they are making their money. So this law was enacted to say you must invest at least 40% of your net premium into the Nigerian economy. The fourth one that affected insurance practice in Nigeria is the National Insurance Corporation NICON Act of 1969. This legislation gave legal backing to the establishment of NICON, National Insurance Corporation, and conferred on NICON as the sole responsibility to ensure what is referred to as a national asset. That any asset, any risk that is that of the federal or center, state or local government, which are classified as national asset, they must be insured by NICON. That is, any other insurance company must not take part in such a risk. NICON have the sole responsibility to insure, to underwrite any risk of the center, that's national assets. National assets that we have then, any national asset that any property of the government that is seen as classified as national asset, the NICON has the sole responsibility to be the official insurer. The law also gave a directive that all Nigerian-based insurance company, a company that operates in Nigeria, must give at least 20% of their risk to NICON. That is, ceding out at least 20% of their risk to NICON, laying off 20% of their risk to NICON. It was compulsory for them to do. This act made it compulsory. Another policy that has influenced the insurance business practice in Nigeria is the Workmen Compensation Decree of 1987. This legislation set out benefit payable by employer to employee involved in industrial accident resulting in death, injury, and hospitalization. It means the policy, this decree, made it compulsory that all employer must buy into the Workmen Compensation benefit or scheme that is provided by the insurance company. This decree actually increased the revenue, the volume of revenue of insurance company, because all employers was mandated to buy into this policy. Hence, the revenue drive has increased. So the volume of revenue, or the volume of revenue increased, there was an increase in revenue generation by the insurance company because employers are compelled to buy into this policy, and the policy is provided by the insurance company. Another one that influenced the insurance business practice in Nigeria is the Insurance Act of 1988. This legislation enabled the federal government to set up an insurance special supervision fund. Mainly, this fund is mainly to supervise or finance and supervise insurance industry. The fund is currently administered by the National Insurance Commission, that is NICOM. They currently supervise this. So this act made it compulsory that all insurance companies must contribute into this special fund on a yearly basis. At the end of the financial year, they will have to contribute into this fund. This fund is meant for financing and supervising the insurance industry. Presently, it is handled by the National Insurance Commission. Then, it is usually 1% of insurance companies' gross premium should be contributed into this. The other one that has influenced the insurance business is the Insurance Act of 1991. This legislation increased the capital requirement for life and non-life insurance business to 5 million each for life and non-life, and reinsurance business to 50 million. It increased the capital base. The effect is that insurance company then can now do more business. Their capacity has now been increased. So this act also compared restriction of insurance brokers and loss adjusters as unlimited liability companies. So loss adjusters, the insurance broker then, they have to pay a minimum deposit also, and also loss adjusters also are made to pay a minimum deposit. Another one that has influenced the insurance business is the Insurance Act of 1992. This act passed to administer the fund generated under the Insurance Act of 1998 to setting up the National Supervisory Board. They set up the National Supervisory Board in order to administer the fund generated under the Act of 1998. Another one that influenced the insurance business is the Insurance Act of 2003. This act reclassified insurance business into life and general insurance business. Life and general insurance. It was formerly life and non-life. Now it is life and general insurance business. This act further specifies the type of business each class of insurance can be involved in. The act says for life business, they can only carry out or involve in the business of individual life business. They can also be involved in group life. And they can also be involved in pension and health insurance. However, the Pension Reform Act of 2004 has taken away this function of business of pension out from the insurance company. This reformer has transferred the business of pension to the pension fund administrators. For general insurance company, they can be involved in, they can do marine insurance, fire, they can do contractor risk, aviation, property insurance, and all forms of insurance that does not involve life. Now let's discuss some review questions based on this topic. Review questions, and how best to answer the questions in case you see it in case you meet it in the exam. Number one question: the insurance industry in Nigeria has been affected by various legislation. Discuss any 5 of such legislation. We have mentioned several of them now, which we have discussed. What I just simply trying to say is that you have to go back to those legislations that have been made. The Insurance Act, for instance, the Insurance Act of 2003, the Motor Vehicle Third Party Insurance Act of 1950, and several of them that was mentioned. Just discuss each of them. Each of them have been extensively discussed. Pick any 5 of such and discuss it extensively. You'll be awarded your full mark. So there you are going to look at the status. Just go under the status. The status that has affected the practice of insurance in Nigeria. There you are going. We listed out 9 status. So just count 5 of it, any 5 of it, and discuss it. You'll be awarded your mark. The second question is briefly discuss the origin and development of insurance in Nigeria. Here you can go. You can get your answer from the origin of insurance. In Nigeria. Just go to that section, you get your answer. I told you from this section we said the insurance has been practiced unknowingly through some social mechanism like ajo, issue, and so on. Unknowingly, where people will be compensated from the fund they contributed. And the conventional insurance company now started fully in 1891 when the Royal Exchange Assurance Company set up their agency in Nigeria. But we also said Samuel Anthony was the first indigenous agency in Nigeria. And in 1921, the first full-blown insurance company, not an agent, was set up in Lagos with their branch in Lagos, known as the Royal Exchange Assurance Company. Go to that section, you get your answer to that. The third one is write short note on the laws of London. So go to the section laws of London. You get your answer. We said laws of London are not an insurance company, they are the market of insurance and reinsurance, and they are known as the largest insurance company, the largest insurance market rather. And we also said there are usually 2 persons that are involved in laws. These are the capital providers, they are usually called the names, and the intermediaries, the brokers, the agent, and any other professional body. These are the major people. So just go to the laws of London and look at it and discuss it. You will be awarded your full mark. let's now move on to the